Well, what a week we have coming up. It's a mega week. I would argue it's potentially the biggest week of the year for the stock market coming up. And this week is going to decide how we finish this 2022 bear market that we've been in, and also set us up for the tone of moving into 2023. I think this week could potentially decide how we move into this key new area or this key new year, and if we're going to enter still on a negative tone or if we're going to lean into 2023 with some positive momentum. And yeah, I think it's really important. So we're going to get stuck into why this is such a mega week. So first of all, probably not the key part, but we have a few companies reporting earnings. Just a little quick shout out. Adobe are reporting earnings on Thursday, one that I'm going to be keeping an eye on because I really like this big tech stock, especially under $200. It's one that I've not bought and I've been staring at it for a little bit, and I've always gone, if it gets not under $200, if it gets into $200 range, I'll start considering it. And it did do it, but it was only for a couple of days and then it came out of it. And the reason why it entered it last time was this big drop here. It reported earnings were not great, or Wall Street didn't like them that much, and it dropped into that $280 range, and it lasted there for only a week, 2 weeks, and then it went back up again. So with them reporting earnings this week, one that I'll be watching, because if we do get that chance at that $200 range, especially if it starts creeping towards $250, I'll be watching that one massive. So just a shout out to that one there, because that's quite an interesting one that's actually been building in the background. But we'll get stuck into the actual major week ahead. So you can see here the S&P was basically flat until the last hour, and then you saw the amount of nerves that were kicking in for next week already. The Friday sell-off was people kind of took a little bit of cash off the table already, as they thought, oh, it's getting a bit towards a big time in the market next week, and we're just going to take some pressure off the table. And we'll probably see this on Monday as well. We'll probably see the market a little bit stuttery on Monday as it kind of builds the momentum into Tuesday. And I think what obviously made people a little bit more nervous on Tuesday is wholesale prices. Wholesale prices came in on Friday. They were up 0.3%, and we expected them to be actually at 0.2%. So it wasn't exactly a massive higher than expected, but it just worried, Wall Street a little bit that it was still a little bit higher than what was wanted. The crazy thing is there was a 38% surge in wholesale vegetables. It's crazy sometimes, like when you look at some of the inflation numbers, that what drives a lot of the key, like a spike of the inflation, and you look at what it is, and it's like 38% in vegetables. Like, it's absolutely crazy. But it's key to say there was a 3.3% decline in energy costs. But it's also worth saying it was the slowest in the last 12 months since May 2021. So getting on to Tuesday, the big thing, inflation data comes out. Now, the thing with the inflation data is I've tried to guess what potentially it could come in at. And the last few times, like, it's just all over the place. Like, it is very hard to predict what's going to happen in that month. I've been staring at oil and think, oil is obviously energy as well, is, one of the key drivers of inflation. There's no wonder that when oil peaked around June time, you'll see here that inflation peaked around June time. That oil, energy cost is the key driver of inflation. So in the longer term picture, the more that this comes down, the more confident I am inflation comes down. But I was a bit nervous in the last month because it was pretty flat in October. And you'll see that inflation actually was way lower than what's expected. So I was like, oh, it could be all right. And then boom, it was a massive drop, even more than what I was thinking, because I thought it won't drop that much. And then oil was way lower. The inflation was way lower when oil was pretty stagnant. So I was like, wow. And then I look at what happened through November. Oil is coming down more and more. When we entered it, it was around $88, and now it's down to $76. So I think that's quite positive. But then out of nowhere you have something like vegetables prices then go up 38%, and you're like, well, who knew that was going to happen? So I've just kind of given up with, in the short term, predicting where these inflation numbers will come in at, because the crazy things can happen. But on a positive note, I will say that we talked about oil the other day, and yeah, I mean, it's down at $71 now. We were talking about only in September, 87, and this is massively coming down, which is really positive. So I'm still confident for inflation coming down in the longer term. It's just what happens in that volatile month, I guess. And then when we look at what analysts are actually expecting, we actually have a consensus now of 7.3%. So when we look at the previous inflation data, it's 7.7%, so that would be a 0.4% drop. Obviously, that's quite a big drop. So we'll see exactly where that comes in at. And I think, obviously to impress the market, it'll have to come in at 7.3 or lower. Obviously, the worry is if it comes higher than 7.3, 7.4, you're probably going to see a big reaction drop in the markets as they react to going, oh, inflation is not coming down quick enough than what we were hoping for. Realistically, if we look at the longer term picture, if it was something like a 7.4, we'd still be quite happy with that. But the market probably will be a little bit fearful on that. And the reason why is because of the Fed. The Fed will be meeting. Inflation data is on the 13th, and then we'll end up having the Fed will be coming out on the 14th, the day after, and they'll be setting their rate hikes. Now, this is a key turning point in what we see in the market. We've seen very aggressive hikes in interest rates, and obviously that's slowed the economy down, and obviously we need the Fed to pivot to have the economy go back to growing, and also has just put a negative tone on the market. And obviously, if we see the end of inflation coming down, the Fed starting to pivot, obviously that's going to get everyone excited for 2023. And what's going to be the key driver of probably that Fed meeting is the inflation data. I think we've seen them say that potentially we could see them pivot, but I think this will be the key decider on if they do decide to start lowering these interest rates. And we saw someone like Elon Musk the other day on Twitter. He was saying if the Fed raises rates again next week, the recession will be greatly amplified. Unfortunately, I do think they're going to increase them for sure. But I think the big thing is, if it comes at 0.75 or 0.5 is the big deal. And I actually looked, and Wall Street at the moment is expecting 0.5. At the moment, there's a 23% chance of a 75 basis point hike. So at the moment, just because basically of the Jerome Powell coming out saying we're ready to kind of slow down rates, everyone already priced in now that 0.5 hike. So if we were to see inflation coming weak and then the Fed to not change the tone and lower the hikes they are doing, it's going to spook the market, and then we will enter 2023 on a negative tone. If we come in with lower than expected inflation, 0.5 hike, that's obviously going to be a really positive sign for the market and moving into 2023. Overall, my thoughts on it is I'm not getting too optimistic at the moment. The reason why is because I think that the chances of the inflation, whichever way, is 50-50 alone. I think it wouldn't take much for something to just make it 7.4% and everyone freaks out. The Fed kind of freaks out, and for me as well is like I always think the Fed at the moment they've been so slow. Like they've been so slow to react to things. Like for me, I look at this and go, for me, 100% they should be doing 0.5 on next week on Wednesday, but what have we seen? Well, we saw through 2020-21, the economy wasn't that bad. In fact, even previous to that, it wasn't that bad before the whole CV situation. But during the CV situation, things were okay, and there were free money getting given out everywhere. We had basically stimulus checks. I mean, there was stimulus checks going out in March 2021, and you were looking at that and going, well, why? Why is the stimulus checks going out at the moment? Because when you look at the unemployment massively coming down, you're looking at spending. Spending was still crazy. People had saved up a ton of money and were going back to spending a lot of the money. There was probably lockdown situations that didn't need to happen, which also didn't help. But that's a sensitive topic that I won't talk about on this video, and a topic for another day. But there was also, the economy was still doing very well in that situation. There was still stimulus checks going out, and you only had to look at the S&P 500 and companies' earnings. From September, October, December time, a lot of these companies went back to doing absolutely fantastic earnings. There was only a couple of industries, like the travel and leisure, for example, that were still really getting impacted. But most companies, most businesses, the world was still doing okay. And through this period of time, the Fed kind of gone, okay, we've been handing all this free money out, and we don't really need to at the moment. Maybe we, there was also key signs that inflation was starting to creep up a little bit. Maybe we bring, the interest rates up slightly here, but, obviously they were very, slow to kind of, react to that. So for me, you only have to look at how slow the Fed was 2 years ago to look at more than likely looking at the situation will be probably quite slow again to kind of go, okay, inflation's coming down, we can ease off a little bit, and they don't, and then the pushes into a quite a big recession, and then start slowing interest rates down when it's too late. So when I look at this situation here, for me, I look at it as a 50-50 situation. If anything, I actually look at it in a bit of a negative light that I think it'll be too slow to react, unfortunately. However, what I do see is that, unfortunately, the next 1 month, 2 months might not be how we want to play out, but we are positioned in a good way. But ideally, if we do have lower inflation that comes in, the Fed do go down to 0.5%. I do look at everything in a positive light. If they do then start putting the interest rates a little bit lower, we're in a good position. If we look at inflation, one of the main issues for 2021, and that starts coming down, we're back into a very good direction into 2023. So we'll see what happens. I think we are still okay positioned for 2023, but without doubt, this little actions between the inflation numbers and what the Fed do will be massive for the stock market in the next month, 2 months, and we'll have. This event will create, volatility. You'll see, without doubt, in the next few weeks, either optimism for the back end of the year moving forward, or once again, negativity that it will continue into 2023. This bear market that we've had, and this is the week. It's a key week, so I think we'll see everyone kind of a bit edgy on Monday. But when we get into Tuesday and Wednesday, when we start getting some of this data out and the information out, I think it's gonna be very interesting how what it's gonna be and how the market reacts for sure. So enjoy, get yourself ready, and I'll see you in a bit.